the show, we will put the spotlight on the basics of commodity market. Commodities as compared to equities are now not as widely traded in India, but what role do commodities play? What kind of opportunities do commodity markets offer? And how have commodity markets evolved in India? To discuss all this and more, we now have Mr. Rishi Nathany, Chief Business Officer at MCX, now joining us. Mr. Nathany, thank you so much for taking your time out and joining us here on ET Now. And first, very basic question, what role do commodity derivatives play in India's economic landscape and how is it expected to evolve going forward?
Thank you for having me here. The commodity derivative markets play a very important role in the development of any economy. Commodities are the bedrock of any economic activity, and India, being one of the largest consumers or producers of most commodities in the world, commodity markets play a very important role in its economic growth. As we are envisaging India to become a $5 trillion economy and thereafter a $10 trillion economy, the commodity derivative markets will play a massive role in helping this growth through price discovery, price risk management, and pricing in India. So we aspire to become a country which determines prices of commodities rather than just take prices of commodities globally.
That's the outlook as far as the commodity derivatives market is concerned, but help us understand how have commodities market evolved in India over the last few years?
So the commodity derivative markets were very vibrant in India. Thereafter, there was a ban in place on derivatives in commodities for quite some time. In 2003-04, commodity derivative markets were revived, and in the electronic form, we've been having them for the last 20 years, as you've seen. So commodity derivatives markets are coming of age, and as we go ahead, you're seeing these markets move from strength to strength, with volumes and participation increasing by the day.
Volumes and participation is expected to increase day by day. That's the word coming in. But Mr. Nathany, what kind of opportunities do the commodity derivatives market present for investors per se? If you can elaborate on that.
Commodity derivative markets present a multitude of opportunities for investors. Today, commodities allow you not only to hedge but also to invest, especially in metals such as bullion, which is gold and silver. Indians have a generational love for bullion, and these have proved to be very good investments. In fact, in the last year or so, these have outperformed even equities. So, of course, there are always cycles when asset classes outperform each other, but long term, one should have commodities in your portfolio as an investor for both diversification and risk management, and to overall increase the diversity of your portfolio.
Important to keep commodities in your portfolio to increase diversification benefits. But Mr. Nathany, what should beginners keep in mind before entering the commodity market? Any kind of advice that you would like to give to beginners?
So it is essential for anyone accessing any derivative market, whether it's commodities or any other derivative market, to come here with proper knowledge. Because derivatives are leveraged instruments, and anyone who does not understand them could land up making a mistake or incurring losses. However, having said that, if you understand them well, they can be ideal tools for investing, trading, risk management, hedging, etc. So first, knowledge, investigate, then invest. That is the mantra I would suggest for everyone.
Investigate and then invest. That's the mantra, not only for equities but for commodity markets as well. But Mr. Nathany, how do businesses benefit from commodity derivatives market? Commodity derivatives have been in existence for the last several years. How have businesses per se benefited from these derivatives?
So in this day and age of geopolitical disturbances and a lot of things going up and down and extreme volatility in commodity prices, it is essential for any business to have stability in terms of both costs of inputs as well as the price of their production. Now, these can happen if businesses are able to hedge their input costs as well as their production. Commodity derivative markets offer an ideal platform for both of this in terms of price risk management. Also, commodity derivative markets have a primary function of price discovery. So businesses can get an idea from the price discovery as to what the prices of the inputs or production could be going forward, and they can also do their price risk management by hedging through various tools available on the commodity derivatives markets, such as futures and options, to lock in their prices and therefore safeguard themselves from any such volatility in prices.
Mr. Nathany, thank you so much for taking your time out and joining us here on ET Now and helping us decode a lot of basics about the commodity market. But shifting focus then, the much dreaded Trump tariffs come into effect on
If you like this video, then like, share and subscribe to ET Now.